at the end of this, I would hope that you could just have just a general understanding of sales and use tax, what it applies to in your particular industry, specific transactions. Not that we're going to be able to resolve every situation, but you'll have a better understanding and you'll have a good contact with one of us or our office if you have any questions that come up down the road. Just a little bit about sales and use tax. Going to the next slide, Jeremy. We'll talk a little bit about a little background, a little history, just kind of keep things in perspective about sales and use tax in Kentucky. First of all, remember that sales and use tax has only been around since 1960. It was enacted way back in the 1930s under Happy Chandler, but only lasted a year until it got repealed. It wasn't very popular back in the 1930s. But in the 1960s, I guess it got a little more popular, but it started out at 3%. And it also started out as a bonus to veterans. If you remember, during that time, we would have had a lot of World War II and Korean War veterans. So the sales and use tax, maybe it was one way it got passed into law was it had that aspect of it as a bonus for veterans. And remember, it's only at 3% rate. Well, it stayed that way until 1968 when Louis Nunn became governor, and it went to 5 cents or a nickel. And Louis Nunn was forever known as Nickel Nunn after that. And maybe that's one reason why we didn't have another Republican governor for 30 some odd years. A lot of people remembered that. We went to 5%, and then it rose again to 6% under Governor Wallace Wilkinson in 1990. We're still at 6%. It's been, 25 years now, we've stayed at 6%. Other states around us keep raising theirs. Kentucky, in relation to our border states, we're the lowest as far as combined state and local sales tax rates. There's some states that have just a little lower state sales tax rate, but if you combine them all the states around us are higher than Kentucky's sales and use tax rates. You may have noticed the last few years there's been a lot of discussion about imposing a local sales tax or even allowing locals to impose a sales and use tax because constitutionally they can't do that right now. So it would have to be a change in the Constitution to allow that. The proposed legislation is also saying that that locality would have to vote to impose local sales and use tax. So keep that in mind as we go forward. I'm sure that's an issue that's going to come up in the next legislative session. But we are at 6%. Sales and use tax, keep this in perspective too, that Kentucky's one of 45 states that impose a sales and use tax. There's only 5 states that don't impose a sales and use tax. Those are New Hampshire, Delaware, Montana, Alaska, and Oregon. So we're not much like those other states, but Oregon is the only one that's kind of close to us population and size-wise, and while they don't have a sales tax, they have a gross receipts tax. It's very similar to the sales tax. Those other states have a smaller population and they derive their state income from other sources. So sales and use tax is pretty prevalent in the U.S., but again, us at our 6% rate, we're one of the lower level states as far as the rate. A few things to keep in mind. We're talking about sales and use tax. There's the law, of course, and our law for sales and use tax comes under KRS Chapter 139. That's where all the sales and use tax laws contained there. There's also regulations that support and address other issues that can't all be covered in the statute. And our regulation process is that as an issue comes up, the department will try to address that through written instructions, and then that has to go before the legislative body for approval. We have about 60 some odd regulations. There's one we're going to talk about in particular that relates to florists and nurserymen that is pretty applicable to this crowd probably, and tell you a little history about it. And there's also case law. In some cases, we wind up in litigation, and when we get a decision from a court case, that gives us direction going forward. A couple things too about the sales tax and the use tax. Those are together and it's one tax. A lot of times we just say sales tax and not realizing what the use tax is, but each of those 45 states that imposes a sales tax has a corresponding use tax. And the use tax, as it was described to me when I first started work, is a backstop to the sales tax. So those transactions that may bypass the sales tax, the use tax is there to kind of catch it. And the best example there is You know, when you or your neighbor or another business or somebody buys something from out of state, you may not have to pay that state sales tax because it's shipped to you. A sale in interstate commerce by the U.S. Constitution can't be taxed. But when it comes to rest in that state, then it's subject to the use tax. So if you went down to Walmart and bought something, you pay sales tax to the vendor. If you bought that same item, say, over the internet from some vendor in Washington State or Maine or Florida, and it's shipped to Kentucky, the use tax applies, the same rate as the sales tax, so that there's equal footing for the local retailer as opposed to if something is bought from out of state. So that's the whole purpose of the use tax, is to level that playing field for our Kentucky retailers. And here's the statutes in relation to sales tax and use tax. We said 139 is the sales and use tax chapter. Specifically 139-200 talks about the imposition of sales tax on sales of tangible personal property, digital property, and certain services. There's just a handful of services that we do tax in Kentucky. Other states tax a lot more services than we do. For example, a landscape service, we wouldn't subject the receipts from that to the 6% sales tax. And we'll talk about this in a little more detail, but there's other services. You go to your accountant, your lawyer, your doctor. If you want to go play a round of golf, that's not subject to sales tax. Those are different services that Kentucky doesn't tax. Other states, some states do tax those type of services. And the use tax, as we said, 139-310 imposes the use tax, the 6%, on the purchase price of the property upon which the sales tax has not been paid. We'll talk about that a little bit too. Go on to the next one there, Jeremy. I'll tell you what, back up one. Okay, back up one more to the forms and resources. Okay, I did want to make you aware of some resources. We've got, I got some business cards here today. Also at the very end of our handout, we got some contact information. But I want to make you aware of a newsletter that the department puts out about 2 or 3 times a year called the Kentucky Sales Tax Facts. We have that available on our website, and it kind of recaps different issues that come up. And we keep an archive of those going back at least 15 years. So that's some place that we can archive information. We can look up information to assist you if you have any questions about certificates, particular sales and use tax issues. Okay, some of the forms that we're going to talk about that come into play when we're talking about sales and use tax. The first one is that registration application. And all that is if you start a business and you're going to be making sales, you need to get a sales tax permit. Now there's other taxes that you can apply for with that application, but that's usually one of the first steps that you need to do. You've registered with the Secretary of State your new business. To get a sales tax permit, you fill out the tax registration application. After you get a sales and use tax permit, this process usually takes about 1 to 2 weeks from the time you submit something. You'll get a letter back in the mail. It'll just be a 1-page letter. At the bottom of that letter is a little perforated piece of paper that will have the name and address and your sales tax account number. That's the account number that will be on the sales and use tax returns that you'll complete. That's called the sales and use tax permit, and then after you've been in business for about a month usually, when the sales and use tax return starts appearing, either in your mailbox or, as we'll talk about, we encourage you to start filing electronically because we have that option. How you can save a little money that way, maybe a little easier to keep up with. Certainly, it's more time sensitive than having to wait on the post office to deliver your return. A resale certificate. Hand me one of those over there, Jeremy. I think I got one on that table there behind you. Yeah, if you've ever in a business or know about a business that you're buying things that are going to be resold, you don't have to pay sales tax every time there's a transaction. There's the resale certificate that applies, so that you issue that to your wholesaler or vendor that you're purchasing from on an strictly item that you're going to resell. A very basic form that comes into play for retail transactions. You can find this on our website and print it out. We've had them on our website for several years now. We also have some in our offices we can send to you if you ever need those, but you can print out your own resale certificate, complete that, and give it to your vendor when you're purchasing things for resale. Now, the other form here you may not be as familiar with, called a Streamlined Sales Tax Certificate of Exemption. And I really want to stress that this is good, particularly if you're doing business in multiple states, that Kentucky is a member of the Streamlined Sales Tax Agreement. If you have a customer in Ohio or Indiana or Florida, and they maybe have their own state certificates, Kentucky is part of the Streamlined Sales Tax group that says no matter what state you're in, we'll all accept this one certificate. It's a little different than a resale certificate, but as long as you have that completed certificate, if you're either purchasing for resale or if you're selling to somebody that's claiming exemption, Kentucky recognizes the Streamlined Sales Tax Certificate of Exemption just as we would a completed Kentucky resale certificate. So we might talk about that a little bit later too. Let's go on to our next slide there. Okay, that's sales and use tax return. Yeah, hand me one of those, Jeremy. This way. Okay, here's the paper form. I don't know if some of you fill that out yourself or you let your bookkeeper or accountant fill that out. But compared to other states, it's probably not too complicated, again, because we don't have that local sales tax. If you ever get into that local sales tax, the return itself is going to get more complicated because we're going to have to identify transactions to the jurisdiction where they occur. And that's the way that money would have to get distributed there. But with Kentucky, we got the one rate statewide, 6%. Gross receipts go in line 1. We've got numerous deductions there with an explanation at the top of our worksheet. Resale certificate is the first one. That's probably the one that's most prevalent for most people, particularly if you're a wholesale type business or you're selling a lot for retail. Make sure you have those resale certificates to support that deduction that you're taking. Another one on here is the purchase exemption. If you're selling to churches or schools, if there's actual sales to those folks, then you keep a separate certificate, the purchase exemption certificate, or here's another advantage of the Streamlined certificate. We would accept that from a local purchase exempt entity. Rather than dealing with all those different certificates, you could just keep one certificate no matter the customer. They can complete that certificate and you can keep that on file rather than the different types of certificates. Another one's the farm exempt. Those of you that are dealing with agricultural customers or agricultural pursuits for the most part, most of our livestock. Again, the Streamlined Sales Tax Certificate could substitute for our Kentucky Farm Exemption Certificate. Okay, you total up all your deductions, deduct that from the gross receipts, and then there's another line that we deal with, is line 23, called Purchases Subject to Use Tax. And we talked about if you're making purchases from out of state, that's subject to the use tax if you're using it, just as if you would have bought it from a local retailer. So line 23A is where you can put that cost or that purchase. On each sales and use tax return, there's that line, that option to report the purchase subject to use tax. Now, if you're not a retailer, there's another form that you can report your use tax on. We'll talk about that. There's different options to report use tax. This is probably the biggest audit adjustment that we would see on audit of a business is the line 23A to look at the purchases, because a lot of businesses either just fail to consider that line or don't have the time to devote resources to looking at that. But if you get into audit situation, the first two things we're going to look at: certificates. Make sure you got your certificates, and you have purchases subject to use tax. So just a little reminder there. One more thing to note on the purchases subject to use tax that also gets overlooked sometimes is if you're truly a retailer and you purchase everything for resale, but occasionally you'll need an item that you have in inventory that's usually resold, but you have to pull it off and to use it within your business. Remember that when you pull it off the shelf and use it yourself, that cost of that item would be subject to the use tax. like the grocery store, there's a spill and they just pull off a cleaner off the shelf and use it themselves. That would be an example of an inventory withdrawal that's subject to the use tax. So you just have to note the cost of those things. Okay, a consumer's use tax return. I didn't bring one of those, but it's a different return than our retailer's sales and use tax return. If you're in the business of doing contracting activities as a construction contractor, we'll talk about this a little more specifics, trying to differentiate between when a nursery business is retailing and when a landscaping business is only doing contract jobs. There's a difference between retailer collects the sales tax, and if you're just a consumer, then you pay tax at the point of purchase of all your supplies and tangible personal property. So if you're only doing contracting activities, and the best examples of these would be your plumbers, your electricians, your carpenters, your service-oriented businesses that their receipts aren't subject to sales tax, but they may have purchases subject to the use tax. We've got a specific return for them called the consumer's use tax. This would be no retail activity. We issue numbers that are in the range of the 900,000 series. So if you ever see a number that's in the 900,000, that denotes to us in the Department of Revenue and others that that's a consumer's use tax account. So they can't issue a resale certificate. It's even on the bottom of the resale certificate. There's a little note about that, about how a consumer number in the 900,000 series may not issue a resale certificate because they're the consumer of everything. Well, if they're buying multiple items from out of state, they would need that consumer's use tax return to report their purchases subject to the use tax. Now, if you're an ongoing business and you have purchases every month that you owe use tax, you'll need a consumer's use tax number. We can send you a paper return, but you can also file that electronically. But let's say you're a business that you don't really have much purchases from out of state. Most all your business is in Kentucky. You're buying everything local and you're paying tax at the point of purchase. You really wouldn't need a consumer's use tax number or return. But let's say you had 1 or 2 transactions a year that did require the payment of the use tax. There's a separate form called a 51A113O that you can report those random purchases. So that's just another option that you wouldn't have to be registered for the consumer's use tax number. Even another option, and this has more to do with individuals, when you're completing your Kentucky individual income tax return, there's a line on the income tax return for use tax for your individual purchases. And we've all done that. We've all made purchases probably over the internet or for some faraway place that we had to have that item, and we probably didn't pay sales tax on that. That would be an opportunity to report the use tax on your individual purchases. There's a line, it's been on the income tax return for probably about 15, 20 years now, a specific line to report that use tax on there. So that's probably be a good time too to talk about that Streamlined sales tax agreement that we talked about. Kentucky is a conforming member. There's one of 24 states that are part of the Streamlined sales and use tax agreement. And it's where states, businesses, and others have come together to try to come up with a way to simplify the sales tax across the different states and to ensure that everybody's collecting the right amount of sales and use tax nationwide, so that we don't have all the transactions that are going untaxed from, say, a large internet retailer who doesn't have a presence in this state would not be required to collect Kentucky sales tax, but instead of one seller not collecting, we've got 1 million Kentuckians buying from that entity and has to report the use tax. It'd be much more efficient if that out-of-state retailer would collect the tax. One of the arguments from business that would be in that situation is, well, I don't know all the rates in all the states, and it would be very complicated to do that. Well, the states and businesses have tried to come together to simplify that, to make it easier for that internet retailer to collect all the taxes across the states. And to do that, When we do that, it would compel Congress to then act to enforce, to create a law on a national level to require the collection of sales tax from those internet-related businesses. Now, this has been discussed in Congress for the last 4 or 5 sessions. There's been some momentum, and then there would be some fallback, and then some more momentum. But the software is available to do that collection. It's out there. So really that argument that it can't be collected is no longer applicable. And it would level the playing field for all retailers. It would help the local businesses that are hurt by those transactions that are occurring out of state upon which the use tax may be due and may not be collected. So that's something just to continue to monitor to see how that progresses. The latest iteration in Congress is called the Main Street Fairness Act. Occasionally that will come up, it'll crop up in the news that's being discussed. And when you hear that, it's just another version of the Streamlined Sales Tax Agreement, which is a way for Congress to force all the retailers, and it would be of a certain size. There would be a de minimis threshold that if you're a small business and you just make one sale to somebody in Florida, it's probably not going to affect you. But try to bring those forward so that all the sales tax is collected from one location from those vendors rather than all the many consumers. Okay, enough about Streamline. Let's move on. The resale certificates. You know, as I mentioned, a key there to your business operations is if somebody's claiming an exemption, make sure you get a completed resale certificate. If you're making a retail sale and somebody says they're exempt, just make sure you get the resale certificate completed. We've had a change in our law to make it easier, we think, for retailers about 10 or 12 years ago as part of Streamline to make things simpler for retailers. We changed some of our language relating to what's called good faith on certificates. If you've been in business very long, you may have run across this situation. We had where you said, say you had a big box retailer that was selling a lawnmower, and they sold it to the local repairman, a person that did repairs, just odd jobs repairs. His normal business was selling repair parts, not selling lawnmowers. So we could have held the retailer, that big box retailer, if they'd accepted a certificate from somebody like that that's not normally in that business is selling. What we've done now is to relieve the seller from having to look at all those transactions. If you have a completed certificate within 90 days of the day of the transaction, then seller, you're off the hook. We can't pursue you. The department would have to go after the purchaser. So that made things a little easier, a little simpler for our retailers to make that certificate. If it's timely and it's completed, you have it on file, then the department doesn't have any issues with you. Another thing about the resale certificate is we have the block to check that's either a blanket or single. If you got a routine customer, he doesn't have to fill out a certificate each time he comes in or each time he makes a purchase. Just check that blanket box. And people ask sometimes, do I have to get one every year? Because some states do require that you get those certificates updated every year. Kentucky, we don't require that. As long as you have a completed certificate, it's good for the life of that business, the life of that customer. We do recommend about every 5 years or so, maybe you get an updated one, just so you've got your contact information from that customer. Okay, here's a little more about the Streamlined Sales Tax Certificate. I think we covered that pretty well. Okay, a little more specific guidance now. We've talked in general about sales and use tax, how it applies in Kentucky, some of the certificates, some of the forms. But now let's talk a little bit more specifically when we have nurserymen, landscapers, lawn care services, landscape management. I'm sure there's a lot of different terms that you all use and different hats that you have to wear as part of your everyday business. But let's look at some basics. The department would look at what we call a nurseryman, and I had to look up the definition of what a nurseryman was today before I came. See if this still holds true. My dictionary's a little old. But it said, A person who raises plants for sale. Does that still hold true pretty good? A nurseryman, the person who raises plants, shrubs, other things for sale. So that's the key there to the Department of Revenue as well, is when you're raising those things that are for sale, then you're primarily a retailer. You're collecting the sales tax unless your customer has an exemption. Stay there for a minute. Let's look at the other possibilities. A landscaper. And I know this has probably changed through the years. You probably, at least best I can tell, we see more landscaping businesses. There's more landscaping going on in our homes and in our businesses. The person that comes out and designs your front area of your home, designs an area for a business. It's more involved in the services and would be considered a contractor. So they would be the consumer of those items. Then you got the landscape management, somebody that just is hired to manage your landscape, to keep it cut, mowed, trimmed, fertilized. Again, that would be more of a contractor type situation where that person is the consumer of those items because they're primarily providing a service to their customer. And then the last example there is you wearing several hats. This transaction may be retail, but this one may be contractor consumer. So how do we handle that, and what's the best way to address that? Okay, let's go on to the next slide here. Okay, nurserymen and retailers. Hand me that regulation. I think it's in the very back there, Jeremy. It's 27050. We didn't put this in the PowerPoint, but you can look this up. But I want to point out how the nurserymen were originally grouped together with florists. Now, some of you may be in the florist business and kind of evolved into nurserymen, but think back to 1960 when the sales and use tax was enacted. We probably had a lot more florists then than we did nurseries and landscapers. So, one of our first regulations, and remember we talked about laws and regulations and case law, but we had a regulation called SU 25. That meant it was the 25th regulation that was ever drafted for sales and use tax, and it related to florists and nurserymen. And there's one little section here that relates specifically to nurserymen. Section 3 of that regulation, I'll read part of it here, says when a nurseryman or florist sells shrubbery, young trees, or similar items, and as part of the transaction transplants them to the land of the purchaser for a lump sum or flat rate, the vendor so selling and installing must make a segregation of the portion of the charge for tangible property sold and that portion for the installation. Okay, that's the guidance for the nurseryman because he's normally in the business of raising and selling plants. Even in our picture here, you can't see it real well, but maybe on your handout there you can. Jeremy did a good job of finding somebody that they have an inventory of plants and shrubs and things. That looks to me like he's probably in a retailing activity there because the customer could come through and pick out that shrub or plant or tree. Now, it may be they could take it home themselves, or it may be that you as the nurseryman may go out and install it for them. So what this regulation is saying is that nurseryman is primarily a retailer, but in the instance where you may have to go out and install that particular plant or shrub, then you would still be considered a retailer. Which is a little contrary to what we maybe previously talked about. But the nurseryman we would still consider to be a retailer in that situation, but you have to split out the labor from the sale of the item. So that's important. Also the third bullet there, to remember that when the nurseryman does other type activities such as installing a sprinkler system as part of the installation of some of those materials, retaining wall. Some other activities similar to that where you're making an improvement to real estate, that's when you would be acting as a contractor and you'd be the consumer of those items. Okay, keep that in mind. Let's go on now to one more thing about the nurseryman. as a retailer, that these are indications that the nurseryman may be a retailer. You've got a specific sign out front, that's advertising plants, shrubs, and things for sale. The person may advertise as a retailer. You can come, general public, you can come and buy this item at my location. You have an inventory of material that's held for sale, as opposed to maybe just taking it yourself to use or install. Or your jurisdiction may have zoning permits that classify you as commercial activity. Those would be some things that the department would look at to see if you may be truly in a retail activity as a nurseryman. Okay, now let's go on to the contractor, to the landscaper. As we said, landscaper more, you may be paying for the services of somebody to design or somebody just to specifically install something for you in the landscape. The landscaper's making an improvement to real property. They may be doing several things as a part of that particular agreement with the customer, with the individual, or with the business owner. When you're acting as the contractor's the consumer, and tax applies at the point of purchase. Particularly if you purchase from in-state, you'd be paying your vendor. If you purchase something from out-of-state, that'd be the situation where you need to report the use tax on your cost of that material. And here's the other thing about the contractor-consumer, that they're not passing along the tax as a separate charge to the customer because it's not a retail sale. Go back to our law on the imposition of the sales tax is on retail sales of tangible property. If you're doing a contract job where you're installing it into real property, making an improvement to that real property, any tax that you paid is just a part of the cost of that material. So it's embedded in your cost. Okay, let's go on to the next one. And here's an example maybe of landscape maintenance, where you may be doing the trimming, mowing, fertilizing, any type of cleanup on that property would be the landscape maintenance. That's a service, and that's a service that's not currently subject to our sales tax. But again, that equipment that you would use as part of that, tax is due on that at the point of purchase. Okay, then we got the other situation where you got numerous hats. And I'd say, if you're not doing it, another business that may be doing multiple things. In this case, they may be selling to a customer. Another customer, they may be going out and doing the whole project, designing the garden or the landscaping job, going out and putting down the blocks, leveling it out, putting in the shrubs, the mulch, you name it. Identifying when you're a retailer and when you're a contractor, and you need to do it at the beginning of the transaction. If it's just a customer who walks in and wants that shrub or that tree, that's probably a retail transaction. When you've got the bigger job where you're doing more of an improvement to the real property, that's the contractor job, so you would be considered the consumer at that point, and just make sure that tax is paid at the point of purchase. So that's where it gets a little hairy sometimes, and particularly if the department has an inquiry or audit situation. Those are the things we're going to have to look at to separate. This is a retail transaction. This is a contractor situation. Okay, let's go on a little bit more, and then we'll field some questions. Okay, how do we go forward? How do I file? Well, as we said, make sure you know the difference between retail transaction and a consumer or contract situation. This florist and nurseryman regulation, it gives a good example that nurserymen can make the sale. They're regularly in the business of making sales, but they can allow the nurseryman to still be a retailer if they just install that shrub or tree that they've sold. You just need to separate that. However, if you're more into the wider range of activities of doing the whole landscaping job, you're going to be more along the lines of a contractor. You're going to be the consumer of that situation. If you're bringing out about 5 trees and all the mulch, and you're going to lay down the block and the pavers, and then come back and fertilize it 2 or 3 times, that's more of a contractor situation where you're making an improvement to real property. Okay, also filing options. We talked about these specific returns for sales and use tax and consumer's use. And we certainly encourage people and businesses to register and file electronically. Because I said, you don't have to wait for the return to get to you. You can go file it 24/7. You can submit it anytime. It'll take care of math errors. Believe it or not, we still have quite a few math errors. People just get in a hurry and you'll make a math error. The electronic return takes care of that. You have to register to do that online through our website. Jeremy and other staff are available to help people go through that process. It takes about just 10 or 15 minutes to go through the registration process. One-time registration, you'd be ready to file within a couple of days. You just go to our website. Here's some of the instructions of how you go about filing that return electronically. Also keeps a history of your returns. You can go back and look at those too. We also have the consumer's use tax. If somebody just has the 900,000 number, strictly a consumer across the board, we just initiated that about a year ago to allow that return to be done electronically as well. Now it is voluntary as far as electronic filing. We've been doing it for about 10 years, but we've not forced that upon people. It's strictly voluntary. We're up to about 30% of all our returns are filed electronically. We'd like that number to increase more and more, just because it's less paper that we have to deal with. But at some point, that may go from voluntary to mandatory. Some states have already mandated that. So if you're already doing it electronically, there'd be no problems. But that's something we're considering, certainly at some point in the future, is to mandate that electronic filing. I think for income tax, we're way up to like 80% now. So if we need to get our sales tax figures, percentages up similar to that too. Okay, we need to spend a few minutes too just talking about the audit process, if that ever occurs. Some things to keep in mind. There's a 4-year statute of limitations for the department to assess. In case there's any errors, remember that the department can only go back 4 years if you're registered. If you're not registered, if you don't have a sales tax permit, if you don't have a consumer's use tax number, then there's no limit to how far the department can go back. Now, historically, we've gone back about 8 years has been our cutoff, but remember that it's 4 years statute of limitations if you're registered. So registered and filing, that's key. Keeping your records up to date. We talked about certificates. If you have that situation, you're a retailer, make sure you got your certificates on file. Those deduction amounts and your line 23 purchases are going to be the 2 biggest areas that potential errors for audits. Okay, also protests and appeals. If you ever have a bill, sales and use tax bill from the department, if you ever get an audit bill, remember that's not the end of it, that you do have a protest period. And again, it's 45 days is the key there to remember. 45 days from the date that you get notified that you have a bill, you can contest that. It's just simply a matter of just writing a letter. I protest or I disagree with this part of the assessment, and the department will work with you through that process to get that resolved. Okay, one more thing. We talked about the retailer-contractor situation. What if somebody was treating themselves incorrectly? It's a contract consumer job, but they happen to be charging sales tax to their customer. Well, the departments run into that, and it's not just your industry. There could be other different industries where the retailer-contractor overlap occurs. The department has this tool that we have implemented depending on the facts of each situation, but we could allow, based on this reporting agreement, for a credit for the sales tax that's been collected from that customer incorrectly to apply against the sales and use tax that should have been due on the purchase of that item. But it's transaction by transaction is how that works. So if we happen to show up for an audit and we see that that occurred, this may be an option. And a lot of times the taxpayer may see a large amount due because we're saying, you know, all of these purchases are subject to tax because you were the consumer. Well, you have to look at your records, and if you charge sales tax incorrectly from your customers, the department will work with you to try to reconcile or give you credit for some of that, because it would have been incorrectly collected from your customer, and rather than you having to go back and give that to each customer, the department would work with you to offset transaction by transaction. So that's something that comes up occasionally when we talk about the retailer contractor activity, but part of my discussion here today is hopefully we won't get to that point because you'll recognize this is a retail transaction as opposed to the contractor or consumer transaction. So we won't have to get to that point. Okay, here's some contact information. That last page, you know, our website, we have those resources of the certificates. We have our sales tax facts newsletter. We have an email address that Jeremy and I and some others constantly monitor that email address, and if you have a question, we're usually pretty good to get back with you that day, get an answer to you. Not 100% of the time, but most of the time we're monitoring that to try to get the information back to taxpayers as soon as possible. And usually the best way to contact us is via email. There's also our phone number of our division, which we failed to include, but it's 502-564-5170 is our general sales tax line. There's also our individual numbers for Jeremy and I and a couple others that are routinely responding to taxpayer inquiries.
This video has been part of the University of Kentucky Nursery Crops web series. For more information on the topics discussed, please contact your county extension office.